Hey everyone, JD Holt here with Alabama Teachers Investment Services located in Gadsden, Alabama. One of the main topics I'm being asked a lot about here lately is the election and what will it do to the stock market. With less than 7 weeks to go to the election, we're going to cover a two-part series with a Biden presidency and its impact it will have on the markets, as well as a re-election of President Trump and the impact that will have on the stock markets. So what can we expect from a Biden presidency? Let's talk taxes. From a business standpoint, the primary risk of a Biden presidency is the potential increase in taxes. Higher business tax impact the earnings of publicly traded companies, which could potentially flow to their stock price. Under the Trump administration, corporate taxes were lowered from 35% to 21%. Clearly, this had an impact on earnings and the markets. The Biden administration is potentially looking at increasing the statutory tax rate to 28%, but he'll need a Democratic sweep of Congress in order to enable that. Also, from a business standpoint, tariffs. The Biden administration will probably be unlikely to undo tariffs on China, but tariffs on goods from major developed market trading partners would likely be reduced. From a personal standpoint, the market perspective, the major concern is an increase in capital gains taxes, which could lead to some selling before higher rate goes into effect. So regulation. Deregulation has been a priority for the Trump administration with particular impact on the energy and financial sectors. Increased regulation has tended to do more damage to small businesses than publicly traded companies. Small businesses are the heart and soul of the U.S. economy, and overregulation weighs on their ability to thrive in the U.S. economy. There has also been some areas where the Trump administration has created certain implicit regulatory costs that will be unwound under a Biden administration. For example, immigration policy and trade. We also feel like financials, healthcare, and energy may be partially vulnerable to the regulatory impact of a Biden administration. So early data favors Biden, but we would still call it a coin toss. Some of the major factors potentially supporting President Trump are the power of incumbency, the electoral college dynamics, and enthusiasm toward one's own candidate. Some of the major factors supporting Biden are the current polls, the president's approval rating, and the economy favors Biden, but circumstances are unusual right now. We also follow market signals. We have often highlighted that the S&P 500 index performance in the 3 months leading up to the election has had a predicative value for who wins the White House. A positive market over that time period historically has signaled an increased likelihood that the incumbent party wins. The clock started ticking on that indicator August 3rd. So far, the S&P 500 is up just a few percentage points, potentially favoring Trump, but volatility could quickly lead to a reversal. As we argued 4 years ago, there was no real reason to sell stocks simply because of a Trump presidency. We do not see a particularly strong reason to fear a Biden presidency from a market perspective. Join in next month and we'll take a closer look at the impact of President Trump winning re-election in November.